Hello, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This week at everything you need to know in 90 seconds at 9 o'clock. With news, benchmark bond yields are suddenly rising in the US. But complicating matters, we are now on tenterhooks for how markets will react to the latest Middle East oil crisis. Drone missile attacks on the core Saudi oil system are likely to impact markets. Crude oil prices are expected to jump when markets open today on the uncertainty. More than half of Saudi output has been knocked out, and it may take days to restore. In the US, the Cass Freight Index, a monthly measure of rail, trucking and air freight volume, dropped 3% in August from a year earlier, the ninth consecutive month of declines. Their report blames tariffs for stalling trade volumes. But solid American retail sales data for August did calm some concerns about the US economy. Those retail sales rose 4.2% from a year ago, but that was slower than the 4.9% gain in July. A surprisingly good rise in vehicle sales kept the data robust, otherwise it would have been lackluster. Oil tensions will probably set the week's market direction, but at the end of last week the US bond markets were turbocharged, with prices falling sharply and yields jumping. Growing doubt about the usefulness of lower interest rates has traders thinking the US Fed may use other means to prop up American economic growth. Those bond yield shifts will have echoes in our markets too. Asian equity market gains on Friday seemed to be on the back of the US president saying he would be open to an interim deal on trade issues, something the Chinese have been pushing for. The iron ore price stopped falling and turned up on the remarks. China suggested it would exempt some American ag products from its retaliatory tariffs, like soybeans. The sign that Americans are coming to understand that a compromise will be needed buoyed Asian sentiment. In Australia, the governing Liberal Party's coalition partner, the Nationals, have called for a law change to protect the provenance of milk, meat and seafood, saying fake replicas shouldn't be allowed to claim they are the equivalents. US Treasury 10-year yield leapt on Saturday, up 12 basis points from the day before, now at 1.90%, and that is 34 basis points higher than this time last week. Gold was sharply lower on Friday at $1,486 an ounce, a drop of $13 on the day and $22 for the week, but it is likely to recover much of that on the oil tension news. The Kiwi dollar opens much weaker today, now at 63.8 US cents, which is more than a half a cent fall from this time last week. On the cross rates were softer too at 92.7 Aussie cents, and against the euro we're at 57.6 euro cents. That puts the trade-weighted index down to 68.9. I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.